Good morning, everyone. Good morning, everyone, and welcome to today's webinar. So to allow more persons join in, we'll be starting in 3 to 4 minutes so that we can let more persons join in. If you can hear me, please, I would like to get your reactions just to confirm that what I said was heard. So thank you. We'll just start in, say, 2-3 minutes so that we can get more persons join us for the webinar before we begin. Thank you very much. Good morning, everyone. Can you hear me, please? Good morning, everyone. Please, if you can hear me, you can just give me a thumbs up or a reaction. Thank you very much. Thank you. So you're welcome to today's webinar, Compliments of the Season, and happy holidays to everyone. I hope your week has been great, and I hope your weekend is also going great as well. My name is Joy Adejumo. I'm the communications lead at Leafort, and it's great to have you all join us for today's section. So as many of us already know, it's easy for businesses to fall prey to misinformations and lots of media platforms like Instagram and other platforms, which is why businesses find it hard to get proper information. And that's the reason why we've decided at Leafort, we've decided to put together this webinar. It's our second webinar in the series of webinars that we've had so far with regards to the new tax law. This webinar has been organized to help businesses get practical, accurate information, and the kind that helps you to properly minimize your tax liabilities legally. So, let me tell us a little about organizers of those webinars, finance, business advisory standards. Over the years in taxes through proper plans, our mission is simple: Africa home global brands, which is why today we have the perfect person to lead the conversation. She's no other person than the CEO of Lifort, Mrs. Toyin Olufon. She's a chartered accountant in both Nigeria, in the UK, and she's a seasoned consultant with over 15 years of experience. She's also a Mandela Washington Fellow and among other notable achievements. Okay, so I talked about, let me do a brief throwback. I talked about our last webinar that was held. I would like to add that in case you missed the last webinar, which is the first webinar in the series for the new tax laws, you can still access it via our YouTube page. You can just go to Lifford Consulting YouTube page and you can access the webinar, the last webinar that was held. So at this point, with clapping, with shouting, with dancing, let's make welcome the facilitator for today's section, Miss Toyin Olufon. I want to get our reactions as she takes the lead.
Okay. Hi, Joy. Good morning. Thank you for the introduction. Good morning, everyone. I hope we are all doing well and we had a great week. And yes, so we don't intend to take too much of your time. Please confirm if you can see my screen. Yes. Confirm if you can see my screen. Fantastic. I can see the thumbs
Yes,
up.
we can.
Thank you. Thank you very much. So I don't intend to take so much of your time. And I think Joy she gave a very beautiful background as to why we're doing what we're doing today. And as we all know, um, right now in Nigeria, tax is a hot topic. A lot of people are panicking. A lot of people do not understand what's going on. But before I comment, I think it's very important I say to anyone on this call that there's no need to panic. As far as you have knowledge, then you know the right thing to do. You know what to do. It's only when you don't have the right knowledge that you get to panic. And also, when you have the right knowledge, you are able to avoid penalties that are unnecessary or interest, or even, will I say, strategically and intentionally ensure that you minimize your tax liability, which I believe is the goal that everyone on this call wants to achieve. And even around the world, even in countries whereby they pay taxes and the citizens even see what the government is using it for. Um, Till today, they are still looking for ways to ensure that the taxes that they get to pay are minimized. So you don't need to, the point is that that's the goal for any rational human being. So welcome to today's webinar. And today we'll be strictly talking about VAT. Um, I'll make sure that it's interactive and we do not take so much of our time and also for me to have enough time to answer your questions. So in case you have any question, I would recommend that you use the Q&A box to drop your questions. And when I'm done, I'm going to definitely take those questions one after the other. So once again, thank you for making our time and being part of this webinar. So today we're talking about the VAT compliance in the new tax era, avoiding costly mistakes. Yes, if you are not aware, there are a lot of costly mistakes that you could easily, um, you know, you could easily be guilty of if you don't have the right knowledge. So just a quick refresher, what is value? What is VAT? VAT is it's called value added tax anyway. We call it VAT, that's the short form, but it means value added tax. So it means that any tax, it's a tax that is charged for anything, product or services, whereby you're adding value. That's why it's called value added tax. Consumption tax charge on supply of goods and services. And typically, who pays VAT? The final person that gets to that bears the cost of VAT is actually the consumer. So that's why we call it a consumption tax. That is the person buying the goods, the finished goods, or the person you're providing the services to will be the one to pay that tax. At the moment, the rate is 7.5, and by next year as well, it's not changing. It's still going to be 7.5. Now, there's something called output VAT and input VAT. Output VAT is the one you charge on your sales. When you're selling a product. Let's say you are in a restaurant, right? Your plate of rice is 15,000. Then you had 7.5 to it. That's VAT element there. It's called the output VAT. So output VAT is the VAT that is paid by the customer. Yes. Then input VAT is the VAT that are based on the purchases that is related to the goods and services that you sell, basically. That is what is called input VAT. So it's important that you understand the difference between the two because I'm going to say more things regarding this um as we make progress. Okay, sorry, I'm trying to move my slides, but it's not okay. Yeah, no. So the point is that, okay, so a quick one. At what point is VAT chargeable in Nigeria? At what point do we say that you've provided a service or you've sold a product, that is vatable in Nigeria? And when we say vatable, that is subjected to VAT in Nigeria. So first of all, when you supply goods, in within Nigeria, we say that it is VAT that the VAT is to be paid in Nigeria. Physical presence as well. If your business is domiciled here in Nigeria and the people that are buying it are here in Nigeria, you pay VAT. So it's all about, most of the time, it's determined by consumption. Wherever the consumption is being made, you pay VAT there. Where the consumption happens, you pay VAT there. I don't know if you people remember this brouhaha that happened with the government when they said they wanted to stop the way they normally split the VAT, the income from VAT, the revenue from VAT. Now, to now ensure that it is driven by each state, meaning that a state gets to enjoy the VAT that they generate instead of the system we have at the moment, which is we pull everything together and we distribute it, using a certain percentage. So at some point, there was that argument on the table that the state that generates the most VAT, like you get the VAT that you generate, And the argument was for that was to try and boost more productivity in all the 36 states that we have in Nigeria, and not that just one state in Nigeria or two or three states are the ones powering the other states. But of course, we know the controversy that followed that issue. So my point is that I'm just portraying the fact that VAT has to do with consumption. The moment that goods, that services, is being consumed in Nigeria, VAT applies to it. And then the physical presence as well, that's also there. Then the beneficial ownership test. The beneficial owner of the rights in or over the goods is a taxable person in Nigeria. If the goods or rights are situated in Nigeria, registered in Nigeria, and exercisable in Nigeria, so ownership test, then that means ownership and location are key, not just where the seller is based. That's very important. Then supply of services. So the service is deemed to take place in Nigeria where it has to do with consumption. I think I've said that where the service is physically performed or where the supplier is located, outside Nigeria or where the contract is executed. This captures imported and digital services. I'm sure that now when you want to run ads on social media, you will see that it's now inclusive of VAT, right? Even though Meta, Instagram is not based in Nigeria, like it's not a primarily Nigeria company. But because we are consuming it here too in Nigeria, we have to pay that. And that's why, it has been incorporated in their system and they get to remit electronically to the government. By the way, I don't know if you're aware, I know that the chairman of FRS had said that they have met their revenue target in terms of tax this year. When I looked deeper at the data, about 40%, about 30% of that revenue was driven by the digital economy. So meaning that VAT from all those taxes from all those other digitally based companies, right? They were able to generate a lot of tax revenue from that. Um, then immovable property connection. If the service relates to immovable property located in Nigeria, including services by agents, engineers, architects, valuers. So the point is that it's possible that you imported all these agents or these engineers, architects, but regardless of the fact that, but because, they are working on an immovable property here in Nigeria, then VAT applies to it, right? Then we have the supply of incorporeal rights. These are like intangibles and things like that. We'll definitely share the slides with you so that you can read more. I don't want to dwell too much on this because these are a bit technical. So if you want to really get, the full knowledge of this, you can, after this webinar, when we share the slides with you, you can just go through it, to read and get more knowledge from it. Then the asset connection as well, that is another way to determine VAT. Now, I think I want to talk about VAT on non-resident. What do we mean with non-resident? A non-resident is someone that who does business in Nigeria, but the person is not registered for tax, neither do they even have their business here in Nigeria. So there are instances whereby you're doing business with someone abroad, right? The person is not resident here. Let me define residency for you as well. We define residency, and it's a universal law, as someone staying, or either someone or a business staying in a country for a minimum of 183 days, in a year. That is how residency is determined. But for a non-resident person, on the top of it, you may think that no, they are not subjected to VAT. No, the rules have changed now. What the rule is saying is that if you do business with a non-resident person, but you are resident in Nigeria, then VAT applies. You know why? Remember the consumption. Because where is the item or the services being consumed? It's being consumed in Nigeria, right? Yeah. So, where a non-resident person is making taxable supplies from outside Nigeria to persons in Nigeria, the taxable person to whom the supply is made in Nigeria is required to withhold the VAT due on the supply and remit to the service. Yes. So, the point is that I've told you consumption is what is determining VAT. So, even if I think this is where it's just important for you to pay attention to, which is if you're doing business with someone abroad and maybe they raise VAT, it's important that you let them know that you will not be paying the VAT to them. However, you'll be withholding it in Nigeria. That's very important. If you don't withhold, trust me, when they come for tax audits, they'll make you pay for it. So it's important that you know this, like you have the right information, to enable you to negotiate when you have such deals in the best way. So yes, so expected to withhold and remit. Now, there's also this other part of even non-resident companies. For some non-resident companies, if they have significant business presence in Nigeria, they're actually supposed to also register for tax. They're supposed to register for tax and then get to remit their accounts, remit their taxes and accounts as well, in Nigeria. We now have that law as well. Um, so when taxable goods are imported into Nigeria through an online electronic or digital platform, for example, an international e-commerce website like Amazon that is operated by a non-resident supplier and VAT has already been charged and collected at the point of sale, then VAT would not be charged again at the Nigeria ports. Do you understand? During custom clearance, as far as you provide proof of that VAT that has been paid. That's very key. So VAT paid online equals to no VAT at the port, but only if you can prove it. I think something is fundamental when it comes to tax as well. For any claim you want to have and you want it to be accepted, you must be able to prove it. Have this at the back of your mind. Let your mind work like that. You must be able to prove it. If you cannot prove it with the right documentation, then you will just have a good story and you'll have a bad case. Most likely, you will not achieve your desired goal regarding that. So that's important, please. So now I want to talk about remittances and recovery of VAT. But before I talk about that, this is how for every invoice now, I think this information is very critical. Because for you to be able to claim VAT input, every invoice, either you are issuing this invoice or you are getting an invoice from your vendor, please pay attention to these details. You must ensure that it exists on that invoice. This is the first step for you to be able to minimize taxes when it comes to VAT. Now, it must have the supplier's tax ID, an invoice number, name and address of the supplier, supplier's business registration number, the date of supply, name of the purchaser or clients, gross amount of transaction, charge, VAT charge, and the rate. That's important. It has to be a line item. There's no more VAT inclusive. No, we are no more VAT. Don't ever accept an invoice, that has VAT inclusive. Don't do that again. It's very important that it's a line item, because it brings transparency and you'll be able to claim that, especially when it comes to the VAT input aspect of this. Now, so ideally, then the VAT remittance, by the way, at the moment, the VAT remittance is done via Tax Promax. So now when it comes to VAT, this is the same rules for both business names and limited. So in case we have a business name here and you're in the business of I mean in your business you charge VAT, all those rules I'm talking about applies to you because when it comes to VAT remittance, FRS is the sole custodian of that. And I mean FRS becoming NIRS, by the way. Let me start using the new terminology as well. So the sole custodian is the NIRS, please. So and it is done through the Tax Promas platform. So if you're a business name, you're not registered for VAT, please get yourself registered for VAT. That's very important. And it is done electronically. It is not done manually again. Now, when a taxable supply is made in Nigeria to a taxable person and the supplier issues an invoice without charging VAT, right? The NIRS requires the recipient of the supply to calculate the VAT that should have been charged, self-account for that VAT and remit the VAT directly to NRS. So no more excuse of, oh, the supplier did not charge VAT. It's not a tenable excuse again, right? If you bought something that should have been valuable, let's say you bought it from an open market, because it is cheaper. And when you go to the open market, nobody is charging you VAT. But what the law now is saying is that you need to charge yourself that VAT. At the moment, when services by artisans, are provided to your business, definitely they are not charging you VAT, right? The law is saying that you have to self-charge yourself the VAT on that transaction and remit. Now, I know it may sound harsh, but as we make progress, you'll see how it balances out each other. Please, can you hear me now? Because I saw my video got frozen for a minute. Can you hear me? If you can hear me, please just the thumbs up. Fantastic. Yes. Thank you very much. So it's okay, I was talking about the self-charge VATs. Yes. So you have to be accountable. And I said it sounds harsh, but I something I like about this is one of the aspects of the new tax law that I really like is the VAT aspect because it's fair, like it balances out each other, and we'll soon get to that point where you will see the balance and you will see how beneficial it is also to you. I'll definitely make you understand that. Now, in self-charge, the buyer becomes responsible for the VAT and not the seller, right? The situation commonly arises when the supplier is non-resident or not properly VAT registered in Nigeria. The supplier fails to include VAT on their invoice, even though the supply is taxable. I think I've said this. So now you're supposed to collect, withheld, or self-account VAT and to be remitted to NIRS on or before 14th day of the month, immediately following the month of the transaction. So let's say that I did a transaction, I purchased something in November, let's say even November 30th, right? And it is vatable. As I said, maybe I got an artisan to help me with some repairs in my business. And I paid him, definitely he didn't charge me VAT. I need to calculate the VAT on that transaction and pay on or before 14th of December, right? And you do that, you are able to file and make payment through the Tax Promax platform, please. Now, so remittances of VAT, what do you really truly remit? For the longest time, I've seen this error being perpetuated, even by consultant and a lot of businesses. For the longest time, businesses have been paying like VATs that are in excess of the actual sum that they should have paid. And that's because they do not have this knowledge. So it's important that, you have this understanding. Um, I tried to, at the beginning, I defined what output VAT is and what input VAT is, right? And again, I will just try and summarize the difference. Output VAT, the VAT that you charge your customers. Input VAT is the VAT that you pay to your vendors for procuring materials, goods, services that you need to provide or create the product or services that you sell basically. Now, there are two things. So what you get to remit at the end of every month to NIRS is what we called net VAT. How do you get your net VAT? Your net VAT is gotten by saying the output VAT minus input VAT. So it is the difference that you get to pay as VAT. What I've seen repeatedly being done by a lot of businesses, accountants, consultants, is that they just take the output VAT, which is the VAT from the sale that's been made, and they just remit everything. You've just been dashing, I mean, you've been giving out a lot of money and excess money to the government because that's not how it should be calculated. So now the good thing about, yeah. So the good thing about this law as well, I mean the new tax law as well, is that in determining your input VAT now, they've added some other component of VAT that are usually excluded before now. Examples, the VAT paid on your operating expenses. Let's say the VAT that you pay anytime you procure a professional service, either a legal service or accounting service. Typically, they will charge you VAT, right? Before now, you just include it as part of your expenses. But what the new law is saying that you cannot claim it as input VAT. That's the good side to it. Also, the VAT that you pay when you purchase assets, right? You can now claim it as input VAT as well. So that means your input VAT now has a lot of buffer. Do you get my point? I mean, the input VAT, it has a bigger scope. So most likely at the end of the day, what you'll have to be paying as net VAT or VAT payable, will be minimal. And in some instances, the input VAT can exceed even the output VAT. Now, the law now went ahead to say that in an instance whereby your input VAT is in excess of the output VAT, you can claim a refund. Sorry, you can claim a VAT credit, not a refund. You can claim a VAT credit, right? And in some instances, you can even get a refund of your excess VAT, depending on what you want. So that makes it equitable. I hope you're seeing what I had said earlier on, which is yes, the law may appear harsh, but there's a balance to it. So now taxable supplies that you can claim input VAT includes goods, services, administrative expenses, and fixed assets. This is very important. And another aspect, I think I'll just say this, is not part of this conversation, but I'll say this, is that when you purchase your fixed asset and you are not charged VAT, please self-charge yourself and claim it as an input VAT, right? That's very important. Self-charge yourself and claim it as an input VAT. Because there's even another side to this law that says that if you purchase a fixed asset that you did not pay VAT on, you cannot claim capital allowance on it. For the benefit of people that don't understand what capital allowance is, capital allowance is the tax provision for depreciation. I believe that most of us will understand what depreciation is. So capital allowance is the depreciation, but for tax purpose, right? And capital allowance is one of the most legitimate ways to reduce your tax liabilities. You can see that all these things are intertwined. Outrightly, I remember that I made a post some time back and someone said that something I've seen about this new tax law is that if you do the right thing, you'll be rewarded. And that's just the truth. So if you choose to do the right thing, the law will reward you for doing the right thing. If you don't do the right thing, then there'll be severe punishment for it as well. Now, so for the refund, where a taxable person has excess VAT input that cannot be fully utilized as a credit against future output VAT, the person can apply to NIRS for a refund. Now, the refund too is not automatic. You'll be required to provide proof. You know, I've said this to you repeatedly. Even if you want, even for you to get that VAT credit, Now, when you are doing the filing, of course, it gives you the VAT credit automatically because of the way tax promax, is structured. But I know that the moment you keep having a lot of VAT credits, they will definitely want to carry out an audit over your business. Now, the best way to ensure that this tax credit does not become tax liability is to ensure that you have documentation. Another good thing that I'm happy about, with this new tax law is that it's going to force a lot of businesses to be structured, to run properly, and to be well organized. And I'm happy about that. Let me tell you why, because I can see the ripple effects. If a company is structured, it's properly documented, they have proper accounting, there is no doubt. In fact, I will say this and excuse my expression. I have no doubts. In fact, even your village people, I mean, like we would say in Nigeria, your village people will not be able to stop the progress of that business. A lot of businesses we see that are not flourishing is because of the anyhowness around the business. But the moment there's a structure, there's clarity, there is insight, there's no way that business will not function, will not prosper. Yeah. So that's one of the reasons I'm happy about this new tax law because it helps small businesses to sit up, to take being structured, being properly organized more seriously. So I'm saying this also in case you're on this call, um, and let's say you run a business that does not have that structure, see this as a challenge for you to grow because without structure, no business can grow. It's just the truth. That business will just be running in circle, but it will never attain its full potential. Now, so refunds are only granted only upon request and verification. That's the only time you can get a refund. Um, so VAT on imported taxable goods. An importer of taxable goods must pay VAT to NIRS before the goods can be cleared at the port. This is usually done at the port. For people that do a lot of importation, you are actually charged VAT when you are clearing your goods with custom. And yeah, it will appear on your PA. There's this document that is issued. Now, if you don't pay VAT, if you don't have a clear PA, eh, that shows the VAT that you paid on the goods cleared, then first of all, you cannot claim that VAT as input VAT. And secondly, you'll be made to pay that VAT again because you don't have proof. So, and I think also it's important that I state this at this point, and this is also from experience. We've seen instances whereby people import goods, they import their goods. However, they just give their clearing agents to just go and clear everything for them. So typically, they don't have any of these documents. They don't have proof. Now, if that is the structure that you have, you need to go and meet your clearing agents because your clearing agent, when clearing those goods, must be able to pay your VAT and give you a proof that it was paid. This is very critical. So no more, oh, I just gave I gave the my clearing agent and the person cleared it. It's not tenable again and you will not be able to claim the VAT input. By the way, it's not even something new because we also have a case that we're handling like that. Goods were imported. However, because they didn't have PA, because it's that PA that that proves a lot of things. PA is issued by customs. On that PA, you will see the value of the goods that you brought. Match it to the invoice, which is usually matched to the invoice that has been raised by the supplier, where you're getting your goods from. You will see it there. You will also see the custom duties that you paid and the VAT as well that you paid. That one document tells all the story. The moment you don't have this document, you are unable to claim. So we had that issue. We had a client that was undergoing tax investigation. And for some of their goods, they didn't have PAR. Do you know that we couldn't claim, we couldn't claim the VAT on them because there was no PAR. In fact, they went ahead as well to even disallow. That's another thing you should pay attention to. The invoice of that supplier for that shipment it can be disallowed. Why? Because the taxman needs our own documents to authenticate the fact that truly, first of all, you brought in these goods and that you brought these goods at this value. If not, that means people can easily falsify invoices. You can tell your supplier to write $1 million. Meanwhile, the value of the goods, and you know that the money you're owing your supplier is actually $500,000. So that's why they need all these other documents, to corroborate that invoice that the supplier has given to you. Now, it's important that please you pay attention to this because these are ways that you can rack up unnecessary liabilities. And by the way, our client actually racked up to this liability as well. Yes. Um, so recovery of VAT input. Okay, yes. So we are saying VAT input remains liable for deduction up to 5 years. It's good. So that means your VAT credit, you can carry it forward up to 5 years. Then after 5 years, it's all gone. So like if you don't you fully utilize it, within the 5 years, then it's all gone. Now, so where VAT input cannot be fully utilized in the period it was incurred, for example, where input VAT exceeds output VAT, the unutilized portion will be carried forward. I think I had said that. And you carry it forward for a period of 5 years, basically. Key conditions to note. Input VAT must be allowable, that is incurred in making taxable supplies. That's very important. Proper VAT invoices and supporting documents must be retained. I think I've said that. The invoice, the details, you need to be paying attention to the details now. Then the 5-year limitation period applies from the end of the original tax period, not from the year of utilization, right? Then input VAT not utilized or claimed within 5 years period becomes time barred and is no longer deductible. I want to believe that probably they will automate tax promax to be calculating this thing automatically since we now do this filing online. I believe that's a sensible thing for them to do, and I believe that that's what they're going to do as well. Um, so limitation to post-commencement supplies. Only input VAT relating to taxable supplies made after the commencement of the act is deductible. Remember? So that means this thing I'm telling you about that only comes into effect from 1st of January. Any supply that you make from 1st of January, not the one you've made in December, please. The VAT incurred before the effective date of the act cannot be claimed. Yes, I thought to say that as well. So I think I'd done this calculation theoretically, but this is it being projected on the screen as well. The VAT payable or the net VAT is the output VAT minus allowable input VAT. And how to calculate your VAT output, that's your taxable sales multiplied by 7.5. Then the input VAT, I think I said I'd explained that as well. I don't want to go more into that details. So yes. So we are saying that so okay, selling price is 1 million. If you put 7.5%, that's 75,000. So that means the total invoice sum will be 1,075,000, basically. And so this is an example. So let's say your output VAT on sales is 150, then your input VAT on admin and operating expenses is 60,000. Then that means your VAT payable will be 150 minus 60,000, which will be 90,000. Now, the good news also regarding this is that if you run a service company, you provide services. Before now, for services, outrightly, I hope people know, outrightly for services, you're chargeable, you charge VAT. If you provide services, you charge VAT, except medical services, educational services. I think those are the ones that are excluded. But typically, every other form of services attracts VAT. Now, before now, we did not, I would say we, because Lifort is a service-based organization, right? Leveraging technology. So before now, we couldn't claim any input VAT. Typically, when our clients pay us VAT, we just carry the whole VAT sum and we pay back to the government. Now, the good news is that even as a service provider, we now have input VAT to claim. We can claim input VAT on the services that were incurred on for maybe our administrative expenses, right? The VAT that we paid. Let's say we had let's say we had to use a valuer for one of our work. When we're paying the valuer, the VAT that we paid to the valuer, we can claim it as VAT input. We bought assets, you bought assets in your business, and the VAT aspect of it as well, we can claim it. We'll be able to claim it now. The point is that it now serves as VAT input in our business. Yay, I'm excited about that. I'm actually excited about that. And so let me see if a business makes taxable and exempt supply. I think before I'll come back to this calculation, I need to explain to you what an exempt supply is and a zero-rated supply is. When I'm done, I'll come back to that, right? Please, you guys remind me in case I forget, but remind me. Common costly VAT mistakes businesses make. These are like the costly mistakes that you could make. Failure to register for VAT, there's penalty for that, guys. Make sure you register your business for VAT. Charging VAT incorrectly, wrong treatment of input VAT, late filing and remittance, poor documentation, ignoring self-charge VAT obligations. Yes, you see, especially this self-charge. At the moment, I've seen companies rack up unnecessary liabilities because of this self-charge VAT. So at the moment, one of the things we do for our clients is that by the time we are preparing, like when we are getting their audits done or we're preparing them for audit and things like that, outrightly we tell them what their self-charge VAT is, and we normally would recommend that they pay. Do you know why? Because if they don't pay, by the time the tax man, NRS comes from for an audit, and they are the ones raising the self-charge VAT, automatically, this self-charge VAT, they come with penalty and interest. Penalty is 10%. Interest is at 30 something percent now. So I have seen self-charge VAT or liabilities double because you did not pay when you're supposed to pay. And it doesn't make sense because eventually you still have to pay. By the way, this is also one of the taxes that the taxman are very quick to identify. In fact, it's very easy for them to identify it because by the time they look at your line item in your financial statement, they look at your operating expense, the different lines automatically. In fact, those ones they don't even ask questions. They're not even telling you to go and bring supporting documents. They're not asking you for supporting documents in any way. The only thing they're asking you, they'll just calculate it automatically and say self-charge VAT because they know you've not paid. And these are avoidable liabilities. These are liabilities that you can do without. In fact, I will always say this. If you would, let's say, because of course, this whole tax matter is not the core of your business. Let's say you even got a consultant like us to help you ensure that you are up to date with your taxes. What do you think that the fee you're going to pay us, is up to the 10% penalty and the interest at 30 something percent? That is like 40 something percent of that liability. Definitely not. It is cheaper. So it's very important that we pay attention, to these little things. They look as if they are not much of a big deal, but cumulatively they're a big deal. And especially if they are, let's say this calculation now is done for we are in year 2025. Let's say this liability is raised in 2023 or 2022. Do you know that, let's say it's a liability of 10 million. Do you know that if you have to pay that liability of 10 million now on self-charge VAT, right? That sum at the moment is about 22 million because it's double. It's usually double and more of that sum because of penalty and interest. And I asked again, if you had gotten a consultant to help you ensure that all these little other things, you pay attention to them and you make provision for them and you pay as at when you definitely not be paying 22 million. You would have still just paid your 10 million and the fee that the consultant has charged you, which is cheaper. Yeah. So yes, this is where I'm coming to. I need to run. I don't have so much time again. So we have the VAT exempt and zero rated goods and services. So for example, I will explain to you what zero rated means and what VAT exempt means. Um, Zero rated supplies are supplies that the VAT attributable to those goods or services are at 0%. Now, the good side of having your products or services being categorized as zero rated is that you can claim VAT inputs. If, excuse me, excuse me, please. Even though even though your VAT output is at 0%, remember, so what that means is that in your own invoice, when you want to sell, it's just like when you want to sell bread now, because bread is zero rated, it's basic food items. Your cooking oils, you can see the example I wrote here, white and brown bread, series, cooking oils, locally produced table honey, culinary herbs, curry, thyme, sparkling or flavored water, water sold in, these are basic food items. Now, the point is that the VAT, hmm, when you're selling is 0%. Now, but remember that maybe when you were buying, let's say your cooking oil, let's say when you were buying it, transportation, you used a structured company for your transportation. They will definitely charge you, let's say they charge you VAT on that, right? Hmm. That VAT now on that transportation, you can claim it as input VAT. So now what that means is that not most of the business, all businesses that are within these zero rated um supplies or that provides that are within the zero rated supplies, you will always be in a position of having VAT credits because the only thing you have to claim will be your VAT inputs. So that means you have a lot of VAT credits. Yes. But remember, I spoke about proper documentation. It's important. It's not automatic. Make sure you have documentation for all those things. If you want to claim input VAT on any of your expenses, and which also includes your operating expenses, the asset that you bought as well in your business, you claim. So now, in these instances, for this kind of companies, I will tell them that they should always ask for a refund. So don't just, because you are zero rated, you will never get to sell anything that will attract VAT output that will be paid to you. The only thing you will have will be VAT input. So for companies like this, it is advisable that you have a consultant that will help you for your VAT refund. Have a systematic way of always applying for a VAT refund. It could be quarterly. May accumulate it every quarter. Go and apply for your VAT refund so that you get, yes, when I say VAT refund, yes, the law is that the government is supposed to pay you those money. Yeah, the government is supposed to pay you that money. Yes. So these are goods that are under zero rated. Basic food items, all medical and pharmaceutical products, including medical herbal products, educational books and material, fertilizer, locally produced agricultural chemicals, locally produced veterinary medicine, locally produced animal feeds, live cattle, goat, sheep, poultry, agricultural seeds and seedlings, electricity generated by GENCOs and DISCOs, medical services, tuition relating to nursery, primary, secondary, and tertiary education, export goods, excluding oil and gas, exported services, exported incorporated property, medical equipment, electrical vehicles, parts, semi-knockdown unit for the assembly of electrical vehicles, right? Those are like examples. Sorry, those are the list of items and services that are under the zero rated supplies. I've explained this. Zero rated means that your VAT is at 0%. And yeah. Um, so let's talk about VAT exempts. So VAT exempts means that um your VAT, you don't just charge VAT at all. Now, the other side to VAT exempts is that claim um you cannot claim VAT input. You cannot claim VAT input like businesses that are under zero rated. You cannot claim VAT impute. So examples are the oil and gas exports, goods purchased for use in humanitarian donor-funded projects, baby products, they are VAT exempt, locally manufactured sanitary towels, pad and tampons, military hardware, shared passenger road transport service like God is Good and all those other shared transport services, purchase hire, rental or lease of tractors, plows, and other equipment used for agricultural purposes. At the moment, when you lease equipment, it attracts VAT. But the one, when you lease equipment relating to agriculture, it's called VAT exempt. Um, you see all the lists, the supplies consumed by approved entities in the export. You see all the list, basically. I want to run. You will definitely see all the list. Yes. So let me go back to that slide. This slide that talks about when you have mixed supplies. Let's say you have supplies, like what you sell rather, right? When we say supplies, let's say that what you sell, some are they are taxable, they are vatable, and the other ones are exempt supplies, right? So the claimable input VAT, you must actually separate the supplies. The supplies that is relating to exempts, you need to separate it from the supplies that is relating to the vatable ones. The input VAT that you'll be able to claim has to relate to the output VAT. I mean, to the vatable supply. So you must be able to keep this clear record that is distinct. Do you get what I'm trying to say? It's very, very important. You must keep this record. It has to be distinct. So let's say, for example, we are saying taxable supply is 4 million. Your total supply is 5 million, right? And you're trying to see, and your total input VAT is 100 based on what you've calculated. You must, you must, the input VAT that you can only claim, you must calculate it this way. Like you must get the percentage that is relating to the taxable supply. That means for your input VAT, you can only claim 80,000. 20,000 will be disallowed because it relates to your exempt supplies. I just thought to bring that to you, at least to talk more about that. That's very important. Then let's talk about the fiscalization system. It refers to the technology-based tools and infrastructure that the tax authority, NIRS, introduced to monitor and capture and verify taxable transactions in real time. The e-invoicing is a system where invoices are generated, issued, transmitted, and stored electronically in a format prescribed or approved by the tax authority rather than paper or manual. So at the moment, there's something called e-invoicing in Nigeria. And at the moment, businesses that have turnover above 5 billion, they are implementing that. So it's a technology that you embed with your own technology that sends data to NIRS automatically anytime you generate your invoice. Now, let me tell you the good side to this. Some people will say, they want to be prying on me. Trust me, if people that plug into this system, it's very easy for them to get their refunds. Yes, because there's transparency. Remember, I just told you about part of the issues we're having, with some of our cases is because of that lack of transparency. I know that some of the input VAT that we were claiming for one of our clients has to do with the VAT that they pay to the shipping company. And the taxman is saying that, how are we sure that they remitted? I mean, like, it's not a business. Ours is that it was charged and we paid. It's for you to know whether it was remitted or not. But with this system now, automatically, the VAT record, it goes to the database of the taxman, and not just to yours, the different sources for which they can easily do a reconciliation. So this system actually allows, you see this VAT refund, this is the only way VAT refund can be very effective is when everything goes through this electronic system. At that point in time, it is clear, it is transparent to both parties, both you as a taxpayer and then even to the taxman as well. It will reduce a lot of um rancor, a lot of disagreement that you normally have, with the taxman. And it will also improve your chances of getting all those claims regarding VAT, right? So instead of using a handwritten or Excel invoice, a business issues an electronic VAT invoice. VAT charge is automatically captured. Invoice data is securely sent to NIRS. VAT returns are reconciled against invoicing data. Very easy at a click. Yeah. So it may also include one or more of the following components. I also remember that before this e-invoicing, there was a technology that was created by FRS, which they were deploying to big supermarkets. So I don't know if back then, I know that they deployed it to ShopRite. By the time at the end of that invoice. I don't know if you paid attention to those invoice. You will see FRS there underneath the invoice. So they plugged in their system so that on real-time basis, they were getting data of the sales that was being made, which brought about transparency. Because what used to happen before now, and by the way, we also have a client like that, a big supermarket like that. In fact, that matter, I'm not even sure they're paying attention to it again. Because the company actually uses a software, in making sales, POS, point of sale rather. So that's what they use. And when the business was being set up, we were part of the business and we ensured that the items that were vatable, they applied VAT to it. The ones that were not vatable, they didn't apply VAT to it. And I remember that they came and said that you're not remitting the right VAT. And we're like, no. Then we gave them the data. But it was a lot of data. You can imagine the kind of data that are being generated from retail businesses on a daily basis, especially a supermarket, because they sell fast-moving goods, right? So we gave them a lot of data. They insisted and came back and said no, and we too we insisted and said, go and look at the data we gave you. That is the data of what we sell. This is it, this is that. But the point is that we were still arguing because they were saying that how can they place reliance on the data? Now, the software that they are using is not cloud-based. It is shelf-based like software. So you must always go to that system to go and generate that data. So we told them that there are ways to know. Bring your tech experts to come and see if we generated this data from this software and see if we tampered with it, because truly we did not even tamper with it at all. Not in any way. We didn't tamper with that data at all. And but my point is that you can see the back and forth. But when there is a system that is plugged automatically, I mean, in real-time basis, as the transaction is happening, it's being transmitted, to NRS, it brings clarity on both parties. And it reduces this back and forth, this unnecessary arguments that sometimes even puts a strain on the business and puts a lot of pressure, especially the finance team. It's the finance team that gets to suffer this. It puts a lot of pressure also on the finance team trying to resolve this matter and at the same time to still keep the company afloat. Yeah. So, so when it comes to fiscalization system, we're talking about the electronic device, the software solution, communication system using a secured network. That's what it actually means in practice. The key features of e-invoicing, electronic invoice generation, real-time or near real-time data transmission, secure communication network, unique invoice identification, yes, the integration with accounting or ERP system. Those are like the key um features about it. So practical implications for business, operate accounting or invoicing system. This is very key. If you're running a business right now and you don't have an accounting system, please, you need to get one. That's the only way you can minimize your tax in this new year. If not, you will be in a lot of mess and you will pay money that are unnecessary. And I'm not trying to create any false fear, but I'm saying this because that is what will help you, to be able to claim what is rightfully yours. And at the same time, but most importantly, I think I even want us to look at it from this angle, that you are able to now able to, I mean, you're able to grow your business. See this reform, see this structure that you need to put in place as an opportunity for you to intentionally grow your business. Because you see, the benefit of having this in your business, it actually supersedes the need of you trying to minimize your tax. Yeah. So integrate with FRS approved e-invoicing platforms. Yeah, so yes, FRS has that at the moment. Train your staff on electronic invoicing and reporting. Non-compliance with prescribed fiscalization tools may attract penalties once fully implemented. Yes. So this is VAT and the energy industry in Nigeria. The energy industry, oil and gas, power renewables, downstream and midstream operation has special VAT consideration because of its capital intensity, import and frequent cross-border services. So VAT status for energy supplies, you have oil and gas, crude oil export is zero rated, domestic crude oil transaction is generally VAT exempted, refined petroleum products. Yes, so we included this because we got a question. Remember when you were registering, we said that you should provide questions in advance for us. And these were like some of the questions that we got, and that's why we included this as well. Yes. The power electricity as well, but we'll be providing you with the slides as well. You can go over it, you can look at it again, and to ensure that this knowledge you are able to retain as much as possible. Then for the renewable and solar and the likes, no, but the moment you provide services, those ones are converted one is very, very important. Um, Energy companies import heavy equipment and specialized assets. VAT is generally payable at the point of importation. I think I said that. If VAT was already charged by a non-resident digital supplier with proof, VAT should not be charged again at the ports. Major risk area, unclaimed or wrongly claimed impute VAT. So let me put it that way. So, but this is the summary: crude oil exports, VAT treatment, zero rated, input VAT recoverable, electricity exempt, non recoverable, PMS agro exempts, then that means the input VAT is not recoverable. The lubricants and gas byproduct vatable and it's recoverable. And all right. Um, okay, so for VAT withholding, so also um there are some, well, I say, what's the word now? There are some agencies that they're supposed to withhold VAT from you. They don't even pay you the VAT, right? Example, if you do business with the government, they withhold VAT from source. Whether local government or state or federal, VAT is withheld from source. The same thing with oil and gas. If you've done business with any oil and gas, you'll see that they withhold. The same thing also with financial and regulated institutions, the banks, the insurance, the pension fund, asset management, they withhold from source. Multinationals, yes, it is withheld from source. So what that means is that they don't pay you your VAT, right? They withhold it from you. But remember, when you are filing, it's important that you file that. Just that you indicate that it has been withheld, because that VAT that's been withheld from you it still serves as your VAT output. So when you are submitting your VAT on a monthly basis, please pay attention to this as well. Don't assume that because that VAT was withheld, you shouldn't account for it, but please account for it. But it's important that it's clearly stated that it has been withheld, from you, from the source. And okay, so these are more examples. So these are some penalties. I'll just quickly run through the penalties because I'm out of time. I'll just run through the penalties. Failure to register for VAT, 50,000 for the first month and 25,000 naira for subsequent months. And the money keeps accruing like that. Also another penalty that is very key and is very easy for any company to attract this kind of penalty. Any company who awards a contract to an unregistered person shall be liable to pay an administrative penalty of 5 million only. That's quite expensive and it's avoidable. So you just need to ensure that whoever you're doing business with is registered for tax purpose. That's the idea. Then failure to file your VAT returns or filing incomplete or inaccurate returns. Now, there's no penalty for inaccurate returns or filing incomplete. So now my point is that instances whereby you exclude that your VAT output because it has been withheld, unfortunately, there's no penalty for it. So there's 100,000 for the first month and 50,000 for the subsequent months. Then when you don't keep proper records and books as well, it's not an acceptable excuse again, and it comes with a penalty. 10,000 naira for individuals and 50,000 naira for companies. Then failure to collect, deduct or withhold tax. If you are supposed to withhold, when a person is required under the relevant tax law to collect or deduct or withhold tax and fails to do so, that person becomes liable to an administrative charge of 40% of the amount of tax that should have been collected, deducted, and withheld, and the principal tax. That's quite expensive. Then what if failure to remit and deduct, as I said, I don't want to do this. Force of fictitious tax refund claims as well. It comes with its penalty as well. And then refusal or failure to comply with information request. Maybe they requested for information, you're not forthcoming. You have 200,000 first day and 10,000 naira for each subsequent day. Then there is an alternative higher penalty where applicable notices specifies 1 million first day and 10,000 naira for every other day. So I know that the penalties are significant, and the idea is just to avoid to serve as a deterrent. When penalty are not substantial, they don't serve as deterrents. So that's why they are substantial. Then also now, when relevant where VAT legalization applies, a person who refuses to grant access to the tax authority to deploy technology after 30 days of receipt of the notice under this act is liable to an administrative charge of penalty for the first day is 1 million, then 10,000 naira for each subsequent days. Yes. So what had happened before now? Remember, I told you there was a time FRS was deploying a technology to retail businesses. So by the way, one of our clients was guilty of this as well. They didn't allow them. They're like, no. But you see, they could do that back then because it was not in the law. FRS did not have any law back in there. But now they now have a law back in there with penalties. So anytime they approach and you say no, this is the penalties that will start counting, from that day. And yeah. So what are VAT audit triggers? Why may you see yourself being written to that they want to carry out audits on you? Inconsistent VAT filing, high input VAT claims. I think I've said that. If you are in a business that you have the right to be claiming a lot of VAT inputs, right? Make sure your documentation is top notch because you are going to be, that one is certain. They will carry out an audit. That's very certain. But the good thing also is that the first time when they carry it out, when they realize that it's because of the peculiarity of a business and that you are not lying, trust me, you'll receive fewer letters. Because you see, there's something about them. They don't keep approaching a business that they know that is doing the right thing. It's also a waste of their own time as well. So, but however, if for the first time you are being written to and you have proper documentation and you're able to prove that they will not disturb you again. We have a client like that. I remember okay, it's not when she was setting up her business. She had already even started the business like 2 years thereabout, but by the third year, she brought us in a retail business for the love of God. Now, it's very rare in our work to see a retail business, try and put those kind of structure in place. But she's someone that knew where she was going to. I remember when we met her, she was even struggling to pay her rent. Her rent is quite expensive anyway, because her business is in a high bro area, you know, in the capital city. So we came in, we put all the structures in place. We said, you need to pay your VAT. We created the structure, got the software, we set up everything for her. Then, in fact, another thing also we had advised her is that, oh, let's carry out spot checks for you on a monthly basis. She agreed. She pays us every month. In fact, that's one of the best clients that we have. Do you know the good side to this thing I'm talking about? This year, she was written to for audits and for her VAT. They came, and we told them our record was complete, which is the truth. We gave them all the data. They saw everything. They're like, these people are really very serious. At a point, they're like, so how are we going to be certain that this one, this item that you say is non-vatable is non-vatable? We said the good thing is that they use point of sale to sell. So, and at every point in time, you take pictures. Now, some of these items, there were still samples even in the place of business. So we said that, in fact, you can come around. Let's schedule a day. We'll bring in out all the items for you one after the other for you to really confirm. And at that point in time, they realized that, okay, this business, they have too much data, or like they have all the data needed to prove their points. And at that point in time, they realized that there was no liability for this business to pay. And that was how it went. Now, I can assure you that this business will not be receiving, those kind of letters frequently because the people there, I mean, in the tax man, they know that when it comes to this business, they do things the right way and they have their data to back whatever claim, that they have. Yeah. So I just thought to put that to say that there are penalties for non-compliance if you don't comply, late filing, interest on unpaid VAT, then reputational and cash flow crisis, impact on business credibility, unexpected tax liabilities, and things like that. So practical strategies to stay VAT compliant, best practices for businesses, set up proper VAT accounting system. Monthly VAT reconciliation is important. Separate VAT from revenue, yes, even though you receive it in the same bank account. If you do this reconciliation, is very important so that you don't dip in your hand into that VAT money. It's always usually more difficult for you to pay back when you spent it. Then you have technology and process improvement. Use accounting system, automated VAT schedules. That's very important. Then engaging professionals as well is very important. Importance of periodic VAT health check, when to seek professional tax advice. That's very, very important. So yes, we've come to the Q&A session of this presentation. I hope this webinar has met your expectation. And thank you again, once again, for joining us. Um, I'm 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 trying to look at my, sorry, give me a minute. I am trying to look for, I want to look at where we have all those questions. Thank you very much. So yes. So do I have questions to attend to? Yes, I do. Okay. So I'll start taking the questions one after the other, and I'm going to run as quick as I can because we have quite a number of those questions here. Businesses that are below the 25 million threshold, are they supposed to charge VAT and show on their invoice? No. So, the threshold at the moment is 25 million. No. Starting from next year, that threshold has increased to 100 million. However, let me clearly state this. It's for businesses that are registered as company as limited liability companies, please. Yes. They are the ones that these thresholds, relate to. That's very important. So 100 million, yes, you're not supposed to charge for VAT. In fact, you're excluded from this responsibility. Now, if I patronize you, and my business does above 100 million, even though you don't charge me VAT, I'll have to self-charge myself VAT and remits. Yeah. So that's the twist to this conversation. Yes, I've answered this. Let me just show that I've answered this. Then, how does a travel agent charge VAT and remits, considering the airline charge VAT already? So the travel agents, I believe that you're providing a service. So you must be able to separate your service fee from the cost of the tickets. If you do that, then you charge VAT on your own service fee. The cost of the ticket is the cost to your customer. That is how you are able to charge VAT. Then you remit as well. That VAT, you now remit every month. And remember, I told you you're a service provider, but you can claim VAT input on the VAT that you pay to, on your operating expenses or fixed asset that you purchase. Yes. So yes, you can do that. Fantastic. How do a company register for Tax Pro Max? Oh, you've not registered. Okay, send us an email. You need to, there are some document that has to be put together to help you set it up. It's not something that I can tell you what to do, but you have to put in some document. I think your CSC document has to be there. There are some forms that has to be filled as well. And based on that information, your tax promise will be set up for you. So you can send us an email after this class. Based on company's business structure, we charge VAT on our profits because we serve as an agent on all our transactions. Are we breaking the law? When you say you charge VAT on your profits, no. You should charge VAT on your service fee, please, right? Not on your profits. What is your service fee? I guess that's what you mean by profits. At least I'm not able to ask further questions, but I want to believe that that's what you mean by service fee. You charge VAT on your, sorry, you charge VAT on your service fee. You are serving as an agent. That means that transaction is not yours per se. Because 1 billion can pass through the account, but maybe it's only 200,000 that is yours there in your invoice. See, the most important thing, I've been talking about documentation. Documentation is key. That's just that's the most important thing in this conversation. In your invoice, let it be that the cost of whatever you're doing should be there, one line item. Then clearly include your own service fee as an agent or agent fee. Agent fee is 200,000. On that agent fee, then you had your VAT. That's how it should be done. Um, Yes, that's how it should be done. Thank you, ma'am. My question, we buy cyber security called Kaspersky from our vendor outside Nigeria and we paid in dollar, but they do not charge us VAT. Do you mean we self-charge? We self we self-charge? Yes, that's what I actually mean. Oh. Actually, that's just the meaning. Yeah, you're actually supposed to self-charge yourself VAT, even if they don't charge you. Yes. Will recording of this webinar be available afterwards? Yes, we are live streaming on YouTube. So it will be on our YouTube page. I think it will be there by Monday, by the way. So you go to Leaford's YouTube page. You definitely see it. Even the previous one that we had, it's on our YouTube page. Is withholding tax also applicable when VAT is self-charge? Yes. Ah, you've not done businesses with such companies. Yes, so they will withhold, sorry, I think I need to be is withholding tax also applicable when VAT is self-charge? No, no. So this is an example because most of the time, while a self-charge in an ideal situation, the only time self-charge should happen is when you're dealing with a small business that is below the threshold. Every other business that is above the threshold is supposed to charge VAT. So when you're dealing with a business that is below the threshold and there's self-charge VAT, you have to charge yourself VAT. You remember that they will not withhold, right? You will not be withholding from them as well because they are exempted, they are a small business, yes. So no, it does not apply in that instance. It doesn't apply in that instance. Then to claim the input VAT, does it mean the person we are buying from has to collect our tin to remit the input VAT for use, or how do you go about this? Okay, to claim the input VAT, no. They are not going to collect your. Remember that the input VAT is the VAT you pay your vendor, right? Your own is to make sure that they give you the right invoice that has that VAT that shows that, let's say you sell, what do you even sell like this? Let's say you sell, I think I gave the example of bread. You sell bread, but in buying the ingredient for bread, at some point you paid VAT. Your invoice just has to show that you paid VAT. And it has to also show, then be sure also that that vendor you paid to is registered for tax purpose. Remember, I've told you that the tax law now is a bit intertwined. You must be looking at different things, not just one thing, to ensure that so that you have a strong case. Remember that the vendor you're using has to be um, registered for tax. So if you are able to ascertain that the vendor is registered for tax and you get to pay VAT inputs to that person, right? You can claim it. You don't have a problem then. The problem will only arise when you know the vendor is not registered for tax purpose. You cannot charge, you will not be able to claim that input VAT at that point in time. Okay. Please give me a minute. I don't know, my console is a bit, yeah. Um, okay, as I'm answering the question, I thought the numbers will be reducing, but apparently you people are asking more questions because the more I answer, the more I see 30, and I'm wondering what's going on. Okay, so we'll try as much as possible, and if I cannot answer everything, we would collate them and we'll definitely respond via email. I know VAT shouldn't be charged on drugs, but there are some pharmacies that charge VAT on drugs. Should it be? No, it shouldn't be. You should tell them that what they're doing is illegal. Most likely they are not remitting that VAT. They're just trying to use that as a way to um, make they're making more money. But no. So, but anyway, remember we said it's on drugs because there are some pharmacy also that they sell other items that are vatable. But if it is drugs, no, they're not supposed to charge any VAT. Please, what's the difference between zero VAT and tax exempt? I think I've explained that. Zero VAT, you are able to claim VAT inputs. That's the difference. Tax exempt, you cannot claim VAT inputs. That's just the simple difference between the two of them. Are professional service firms exempt to charge VAT under the? No, they are not. You're number one on the line. You must charge VAT. Professional service firms, you must charge VAT. By the way, also professional service firms are excluded from that threshold of 100 million. Professional service firms do not have a threshold. So meaning that even if you make 30 million in revenue, you still have to pay your tax. You still have to charge VAT. You're not excluded in any way. When discussing the remittance of output VAT, you mentioned that it should be deducted from available input VAT where applicable. However, if VAT is to be remitted directly, the vendor's TIN is requested. How is the requirement satisfied in cases where the VAT is settled through deduction before remittance. Yes, I think I've said that. So there's a schedule. There's see, I don't know if you've tried to file VAT on tax premise. It's been a while. I've done it personally, but my team does that. So there are different, it asks you certain questions that would help you. I mean, when you're trying to file your VAT. So, but my point is that yes, it has been deducted at source, but make sure when you're filing, you capture it. Now, when you are filing, I think you will capture it as so there are different there are different section under tax pro max. I cannot recall correctly. But I know that like now for exempt goods, in fact, it will ask you if you have like maybe you sell exempt goods or yes, so you can put it maybe under this exempt goods. And that's if there is no more proper structured way to do it on tax pro max to say that yes, we made this sale, but it's exempted. And the reason is that so that the VAT payable will not be in excess. I understand your question. Because if it has been deducted at source, right, and you are capturing it as your VAT output, tax formers will most likely calculate, it for you normally. So it's important that you are able to go and put that particular sale under exempt so that it just calculates it as zero. Do you understand my point? You calculate your VAT output as zero for that one, and it will just be the other ones that it will calculate for. Yes. If you buy an asset, are you saying as a company you need to self-charge VAT on the amount you are buying it? Absolutely. That's what I'm saying. Yes, you got it right. For company in free trade zone, for supply made to them, we charge VAT, but at the point of payment, they did not pay VAT and still deduct withholding. Is this correct? Let me read your question again. For supplies made to them, we charge VAT. So I want to believe that you're selling to a company in the free trade zone. Yes, but the point of payment, they did not pay VAT and still deduct withholding. What do you mean that they did not pay VAT? Did you people ask why they did not pay VAT? Because they are supposed to pay VAT. Okay, I know why they will not pay VAT. Okay, so okay. Remember that VAT has to do with consumption, right? Now, for companies that exist in the free trade zone, they are in Nigeria, but they are not in Nigeria. That's the meaning of running your business in a free trade zone. It's like creating an international country within Nigeria. So companies in the free trade zone are actually they are not in Nigeria, but they are in Nigeria. I mean, they are not in Nigeria for tax purpose. So yes, when it comes to consumption and what they sell as well, companies in the free trade zone, when they sell as well, they're not supposed to sell to Nigeria. They normally would export. So when it comes to VAT, remember that we say that it has to do with consumption. And that means that it is not being consumed there. Do you get what I'm trying? It's not being consumed in Nigeria, so that's why they're not paying you VAT. Yeah, that's why they're not paying you VAT. I see invoices for electricity that shows VAT added to it, but from what you explained, it's supposed to be um exempted. I think it's starting from next year. Remember? It's starting from yesterday. Companies turnover less than 5 billion. How do they generate invoice and do remittance? I want to believe you have an accounting software in your company that you use to, if you don't have, get one, that is used in generating VAT, your invoice. That's very important. And you do your remittance through Tax Pro Max. That's very important. Is an individual expected to charge by when providing services to a company? Absolutely, yeah. You're supposed to charge VAT. As an individual, yes, you are too. And remit. Many thanks for the insightful and fully knowledge-based session. Oh, thank you for your kind words. ABN is also expected to charge VAT, right, and remit. Absolutely, yes. I've told you, for ABN is a business name. You charge VAT and you remit to FRS. I've told you that FRS is the main, like FRS is the body that is in charge for collecting VAT. Are landlords expected to charge VAT now or withholding tax deducted? Landlords know VAT is exempted, from rent. Rent is exempted from VAT. For landlords, what you're supposed to do is to withhold their money, 10% of their money. That's what you're supposed to do. How is 100 million turnover determined on a monthly basis or given that VAT are filed monthly? Yeah, so you are the one that knows your business now. you know the trajectory of your business and you know the potential as well. If you believe that before the end of the year, maybe because of some contracts you've closed, right? Or some opportunities that you've closed, your turnover will be more than 100, then please charge VAT and file monthly. But if you believe that in that year you'll not do up to 100 million, then don't do that. And is it advisable when going, okay, is it advisable when going to a contract with a consultant to state in the contract that the consultant will handle their taxes themselves? I think it's better that it's clearly defined. When you say they will handle their taxes themselves, what does that really mean? I know that, and I know I'm saying this because I've seen a lot of very vague contracts like that, whereby the clauses are not well defined. I'll prefer that it is well defined. So it will reduce your headache with the taxman when you need to prove things. Define things. It's very key. That's very, very key. By the way, when you say they will handle their taxes, if they are supposed to charge you VAT, please let them charge you VAT. It's either you're negotiating, because you see, if they don't charge you VAT, even you too, this is another thing, or this is another side to this conversation. You don't benefit from it. Remember, I just told you you can claim VAT input on services provided now. So when you tell the consultant that they will handle all the taxes, you shoot yourself in the leg, because you don't get to enjoy the VAT input aspect of that transaction as well that you too can claim. Please, how does a business that is not invoice based navigate through e-invoicing system with NRS? That is not invoice based. Is your I want to believe that your turnover is not up to 5 billion. If you're up to 5 billion, there's no way you not have an e-invoicing system. But if you do not have by the way, if you don't have a system, right, for whatever reason, because there are some unique businesses like that. So let me be real as well. Please send us an email. Actually, there's a way to navigate that as well if you don't have a software, that you can plug into the invoicing system. There's a way to navigate that, but reach out to us. Good afternoon. I work in a fintech company and we have certain investors who from time to time liquidate their investment before maturity. Is the penalty charge on such transactions vatable? Penalty charge. Good question. This will actually require me to think a little. Um Because I know, yes, if you liquidate your transaction before, no, I don't think, no. It shouldn't attract VAT. Yes, because that penalty charge, right? That is not your primary source. I mean, that's not it's a penalty. That's the word I will use for it. So it's like other income. It's not part of the primary income of the company. So no, you don't charge VAT on it. But however, if you don't want to have issues as well, the way your audited financial statement is done is very critical to not putting yourself in trouble regarding this question. Yeah, it's very critical. I've registered a business that is not functional. I registered it 3 years ago and I've never filed. Will the penalty apply? No, it only applies when you commence business, please. If you've just registered your business and you've not done anything with it, you don't have any penalty. For an organization that does cash purchases, how is VAT treated? If you do cash purchases, please get your invoice. That's very important. If you do cash purchases, get your invoice. But I know also that it will become more difficult to do cash purchases starting from next year because of there's this monetary policy regarding cash, holding cash and depositing cash. That may become more challenging starting from next year. But either cash or transfer purchases or whatever you do, the more critical thing is to get your is to get an invoice. If you paid VAT, get an invoice for it. If you did not pay VAT also, regardless, get an invoice so that at least you can claim that expense, as an allowable expense. What is the rate that should be used? Well, I would advise that for most of those transactions that you want to claim VAT input on, please make sure it's not cash transactions. It will reduce, see, it's all about transparency and having the ability to defend your claim with the taxman. If you do cash transaction, it reduces your ability to be able to clearly defend that. What is the rate that should be used when self-charging for? It is 7.5. It's the same VAT rate, please. So small businesses don't pay VAT. No, they don't. Small businesses do not pay VAT. Please, my sons are into forex trading. Will they pay any tax on what they are earning? Oh, yes. There's a new For businesses in cryptocurrency now, they need to pay taxes. So that's a different ball game. I cannot answer that question here now. If you want us to like answer you more in detail, please send us an email. But yes, cryptocurrency, forex, there's a new law for them as well. They must pay tax. That's very important. Please, how can we go through an instance where we have to make payment through the checkout system that the price is static and the company are not Nigeria based? Yeah, the price is static. That means they're not charging you VAT, right? I've told you to self-charge your VAT. Does a small company not within... Hi, Kubrat Unisa. By the way, that's my friend. Does a small company not within the threshold also have to self-charge when they patronize other small businesses? No, they actually do not have to. If you're not within, sorry, does a small company not within the threshold also have to self-charge when they are so I think you want to say they are within the threshold. I mean, the threshold of at least is 25 million at the moment. Then by next year, 100 million. So if you patronize businesses, like you're patronizing all the businesses you're patronizing within that circle, you're a small business, the business also you're patronizing, no VAT for you people. Keep enjoying your life. Keep buying whatever you need to buy. Okay, these questions are enormous and they keep, anytime I scroll, I think that I'm almost at the end, but guys, there are so many. Okay, in a situation where you payee was deducted but wasn't remitted by the company you work for, and in few months you leave that company without them remitting, your payee ledger shows the liability that what are the steps you take to properly reconcile and let the tax authority understand the situation. Okay, you need to reach out to the organization. That's number one, because it was withheld from your money. The truth is that if you really want to do this the right way, you may have to report to the tax authority. You know, you may have to report to the tax authority, and they will definitely now reach out to the organization and say they want to carry out an audit, which will now compel them to pay, your payee. Yes, yes. And for business name and not company, what is their threshold? Limited is 100. Can we do business with business name entity and then self-charge not up to 100? Do they need to charge? See, you need to charge VAT. So let me tell you, there's something people don't understand about this law. Let me tell you why that threshold exists for limited liability company. Everywhere around the world, right? It is cheaper for you to run your company as a limited liability company than as an individual or a business name. A business name is like an individual as well. I hope you know that. So that's the anomaly that this law is trying to correct. Indirectly, the government wants everybody to go and register their company as a limited liability company. I'm telling you what's going on outrightly. So unfortunately for business name, it does not apply to you. You are still supposed to charge VAT. And whatever profit you make at the end of the year, let's say that your turnover is even 80 million, but you made profit, you are supposed to pay personal income tax. But for a small business registered as a limited liability company, the profit that you make, because your turnover is 80, you don't get to pay CIT. The only thing you have to pay is also personal income tax, but based on the amount that you earn from that company. Do you understand my point? So yes, that threshold does not relate to business name, and I've told you the spirit behind that. Companies, it must be cheaper for businesses to be run as a limited liability company than as an individual. That is the way a proper country should function. So it's an abnormality that the government is trying to correct. What apps are advisable to use for business owners less than 5 million naira profits? Um, when you say apps, so I know that we have Times accounting software. It's very cheap. I think they do 750 naira, 750 naira per month. It's very cheap, and it gets the job done in a very good way. I mean, a very easy way also for you. It's very cheap. How does individual remit VAT to NRS? You need to register. You register with NRS. Tell them that you want to register for VAT purpose. They will give you a form. There's a form. There are some other documents they will tell you to bring, and based on that, they will set up tax remarks for you, giving you the login details and with your password as well. Can VAT paid to individuals be claimed as VAT input? Is the individual registered for tax purpose? If the individual is not registered for tax purpose, no. So that's the answer to that question. We serve as an intermediary. We purchase capacity and sell to our customer. My MD don't want me to charge VAT on it. He's requesting that we should include installation on the invoice, and the VAT should be charged on the installation not on the cost of capacity. And VAT on installation is this Yeah, it's called structuring. He has not done anything illegal. Charge the VAT on installation. That's fine. If you can structure, so that's what I'm saying about. So when it comes to tax, right, it's very important that you have someone very knowledgeable that is guiding you. What he's doing, he's not doing anything illegal because he's saying capacity is the cost. Like that's the cost to you people. 1 million, and you people actually buy it. It's not as if you produce it. It's 1 million, you know, and installation is 100. That's fine. Please, I need further clarity. Tax will be implemented based on every transaction made from So business that don't, what would they do? What will they do? What tax is applicable that don't make up to 100? You don't have any tax. If you are registered as a business, as a limited liability, I think I've answered this question over and over. Please, okay, okay, I think I have only three more questions and I'm done. Please, for a business enterprise who sells to the open market, how will the invoicing be handled and recorded properly? I'm not sure I can see that question again. Please, for business enterprise who sells to open market, how will the invoice be handled and recorded? So for a business enterprise, the first of all is, are you a small business or a big business? If you are less than 100 million, please don't disturb your head. If you are above 100 million, you need to put more structure to your business. This is what this conversation is all about. You know, start even, let me say start from, because I don't even know the setup of your business as well. If you can deploy technology, that's fine. If you can, start with at least the invoice that you write with the duplicate copies. Make sure it has all those information that I said an invoice must have. Make sure that the buyer sign as well. Like just make sure you do everything properly. Yeah. For record keeping, yes, I'll never forget the story. My mother started with biro and paper in keeping her records. Uh Case of microfinance bank, how does this affect them, most especially the e-invoicing? You have to plug in into the e-invoicing platform. Yeah, that's important. E-invoicing, by the way, for banks, would that work? I think you people have a different, I think they have a different product for the financial institution. You know why? Because it's not as if you are generating invoice. How you make money is maybe you give out loan, you make an interest on it. Do you get my point? So your own industry is a bit peculiar. It's not the same e-invoicing platform that will be used. How does this affect? I thought I'd finished reading this question. How does this affect an asset management company as well? So when you remember that you're asset management, it's a portfolio of assets that are being managed, and they are in different forms. There are different kinds of forms and kinds. But the most important thing for asset management is that when you're charging for your service, that you charge VAT on it as well. I think that's critical, right? Then when you have to pay out maybe to your customers, maybe their interest or something, remember to withhold. On the top of my head, those are like the key things that applies to your asset management firm. If an individual registered with NIRS for that purpose, does it mean that the individual will have TIN? Absolutely, that's what it means. The individual, they will give you a TIN, but it's specifically for that purpose. That's what it means. Okay. Yes. Okay. I registered it 3 years ago and I've never filed with the penalties. Okay. Do you organize tax trainings? Interesting. Um, so are you interested in tax trainings? I think, let me see, can you just a show of hand, raise your hands up if you'll be interested in tax trainings. So we used to, but this year we've just decided not to go that route again. Yes, but we used to register, we used to put together tax trainings. But I guess it's something we could take into consideration as well so that we can go more in-depthly. We could take that into consideration. So thank you very much. And at this point, I tried as much as possible to answer all your questions, and I think I did answer your questions as well. So at this point in time, Joy, I'll pass the baton to you. You have the floor. But thank you guys, and I hope you've learned a lot from today's class. And as I said, if you need more guidance, we hope to work with you, at Leaford. This is what we do. Tax is our business, and we definitely do know the tax law very well. It's one of our key specialty. Thank you very much. Joy, we can't hear you. I can see that you're talking, but we can hear you. Yes.
Oh, yes. Sorry, I was muted. Thank you so
Okay.
much, ma. Although I dropped some questions in the chat box from those who were live streaming on YouTube. I don't know if
YouTube.
you noticed.
Wow, I
Yes.
did not respond to YouTube. Okay, so that I will not be unjust, guys. Let me quickly respond to the YouTube guys.
Thank you, ma.
Let me respond to the YouTube guys. I hope you guys are still plugged in though. How will the e-invoicing capture inflows that are not income for that year but of the next year, meaning it is a liability? So remember that when it comes to revenue, if you're an accountant or you understand a little bit of accounting, when we declare our revenue, it has to do with remember, it has to do with accurate. We do it based on accurate basis, meaning that whether cash has been received or not, that's how we declare our revenue. Now, I know that cash VAT is on cash basis, and that's why I understand this question as well. So you see that e-invoicing platform is just capturing all your data, right? Remember that by the time we now prepare your account or we see the accounts, we would know if e-invoicing has captured the VAT, what the VAT output should be. And you remit at the end of the year, you're saying that this is what I received. Because by the time we do that calculation, the balance should be sitting in receivables. So it can be easily reconciled. Do you get my point? The whole idea is for the taxman to have the full data, then, from that full data, if adjustment has to be made because you do not receive all the money, definitely you can do that. But that is verifiable. By the time they look at your bank accounts, they look at your receivables, your audited financials, we can tell whether what you have declared is right or wrong. Question is, the firm is in the edutech industry liable to charge and remit VAT? The firm provides training on related tax tech related matters to both. Yes, you are to remit, is vatable, sorry. It is only institutions, primary, secondary, tertiary, that are exempted. But an edtech company, yes, you have to charge VAT. Does a small company need to register for VAT or wait till it crosses the threshold? Yes, when you cross the threshold, you can register. Yeah. How will this fiscalization be implemented to businesses like bakers and food businesses? Oh, this fiscalization is actually applies to you people. For food businesses outrightly, I told you I know they have this software. I don't know if that's the one they still want to deploy. But before now, they had a software that they used to use for retail business that they plug into your own ERP as well. So what that software does is to get the data on real-time basis as you are raising your invoice, yes, they do that. For bakers, it has to be the well-structured bakers. I hope you know that. Not the bakers not a bakery that's, you still have people using hand to mold and put the bread inside and things like that. It has to be a well-structured, you know, and that's the thing for bakers now. If you now want to enjoy your VAT input, I've told you, this new tax law is calling everybody, every serious-minded business owner, eh, to be structured. So for bakers now, if you want to enjoy your VAT input, you have to put serious structure in your business. So you cannot operate like a one-man business, that roadside business again. You have to become very structured. And if you're structured, then you enjoy the benefit of your VAT input because you can claim that. How does a construction company whose operation is heavy on manual labor um pay VAT on such services? Okay, so for this company, for this kind of industry, first of all, do you want to claim VAT inputs? You cannot claim VAT. How do you want to claim VAT inputs? Because that will be the whole essence for you, trying to say you want to pay VAT. But a better way for you to structure it. So let me tell you, this is one of the things I've seen. Um, one of the things I've seen, one of the bottlenecks I've seen in the construction industry is that because you use artisans, that you pay this little money every day. Now, there is no even third-party documents to substantiate that value that you've paid. So because of that, a lot of times the taxman will want to disallow that cost because it's usually significant. If you look at a construction company's direct cost, I mean cost of sale, labor, you can see labor running into 500 million. Yeah, it's just because of the nature of that business. Now, it's important that you're able to structure it in a way that you have a third party invoice validating that. So you could want to create a structure like you saying that, oh, I got someone, someone is in charge, or a business name is the one in charge. They are the ones helping us get these people, and for this we pay them a small fee. Now, on that small fee that you pay them, they can now charge you VAT, which you will pay. It does two things for you. It helps to validate all your labor costs as an allowable cost. And at the same time, you get to pay VAT, which is usually based on how you structure it. You pay a little sum as VAT as well. But the point is that it prevents chunk, that cumulative chunk of labor cost to be disallowed or to become an area of contention for tax purposes. So I think that structure would help you. So in a case where a company charge VAT and they don't remit, how do you claim VAT refund when your company produces zero rated? In a case where a company charge VAT and they don't remit, first of all, are you sure? Is that company, this is what I'm asking. The first thing you need to be certain is that that company is registered for VAT purpose. As far as you is registered for tax purpose, basically, because if you are registered for tax purpose, you'll be registered for VAT purpose as well. I think for this particular company, be sure also they're registered for VAT purpose. Be certain of that. As far as you tick that, and they do not remit, it's not your business. You do your own part because you sell zero rated products, right? Yes, do your own part. The good thing is that if they don't remit, it gives NIRS the information to go after that company at that point in time. And that's what they want to be doing now. They want to be more proactive. Remember also that the essence of this new tax law is to expand the tax nets. Before now, it is the few people that have been paying taxes that have been paying taxes. Anytime the government needs more money, they will introduce new taxes. It's the few people, few businesses that have been paying taxes that are still paying. But now, with the advent of this new law, they're trying to expand that tax bracket. How would the fiscalization, which is the mandatory invoicing, providing real-time digital transactions introduced to registered business name bakers? Well, I've told you that no, they've not, the fiscalization won't affect you yet for the bakers, for the business name now. It's for the big guys at the moment. I did over 200 million in revenue without collecting VAT. What can I do now? Wow. You did not collect VAT. Wow. Okay, this one is if you want special advice, you write to us. I cannot tell you what you do at this point. It's not an open conversation to have, basically. Yeah. That's it, but reach out to us if you want more. Joy, I think I'm done now. I've tried. Thank you very much.
Thank you so much, ma. Yes. Yes, we're done. Thank you so much, ma. At this point, I think we've taken almost all the questions that were dropped on YouTube and most of the questions here. So any other questions that were not taken, we would respond via email. So thank you very much, ma. Thank you so much. We are very grateful for taking time to explain in such great details. We are very grateful, ma. Thank you. At this point, I want to welcome Sonia to give us our closing remark. Please, Sonia, you have the floor.
Thank you, Joy. Good afternoon to everyone. I want to take a brief moment to extend a warm welcome and appreciation to everyone that joined in for the webinar. I want to say we appreciate your time, we appreciate your engagement and your most delightful questions, and ultimately your commitment to building a more sustainable business. I believe that the insight and the clarity from today's session is a valuable starter towards your business or your company strategy. As we wrap up, I would like to talk to you about the tax minimization strategy document prepared by Leafort. Now, this is a customized guide that would help you reduce your tax exposure and legally minimize your tax liability. So to build this strategy document, we Leafort would be engaging with you via a consultation, a one-on-one call, where we will get to be asking the right questions, we will get to understand your process, and we will help to build a strategy and a structure that perfectly fits your business. Now, I want to say that this tax minimization strategy document is one that Leafort does for its clients, and this is at a valued fee of 1 million naira. But for the attendees of today's webinar, we are going to be giving this at 250,000. So if you see this offer as something your business would like to commit to in order for it not to exist in a survival mode ahead of the new tax year, please, a link will be dropped on the chat box. Please, you can do well to click on it and follow the process through, or you can just email us via our email much more later. Now, I want to say that at Leafort, beyond tax services, we offer other services in order to help your business into a more sustainable solution. So we offer both accounting and financial reporting service. We offer automation of business processes. Your audit and your assurance is well covered by us, as well as business advisory and performance support. So once again, we want to say thank you for your questions, for your engagement and your commitment to building a more stronger and a more resilient business. Now, before I close, I want to say that why B&B Limited or Adebanke and Funke business failed, not because of their negligence or because of their laziness, but it was as a result of a lack of guidance and structure. We do not want that to be you. So please, if you know this is something you want to commit to, you can do well to follow us up. Thank you once again. Thank you for your time, for joining us. And we want to wish you a happy Christmas holiday and a season. Thank you very much.